Hi everyone, let's look at my preferred and alternative scenarios on the micro, including potential trading setup. Starting with my preferred Elliott Wave scenario on the micro on Bitcoin, where we are looking for a three-wave structure over here, which then either is an ABC or a WXY. Now, if we look at this structure from an ABC perspective, wave B as an expanding flat hit the most common target area for a wave B perfectly, which is between the 1.236 and the 1.38, in confluence with the daily naked point of control for then a potential long entry over here, after seeing the wick close on the 5 minute above the 105 Fibonacci here, for then a move to the upside, where usually then you want to say see a wave C, and a wave C should be an impulsive structure, which is then a 5-wave structure in a wave C. At the moment this range is taking a while, and that is then also the reason why I've also put a WXY on my chart. So an ABC is a 3-3-5 wave move, where usually the last structure, which is wave C, the impulse, is a relatively quick move. But because of the length of this range at the moment, I also put the WXY on, because a Y wave is a 3-wave structure where we then expect a 3-wave move to the upside. So either this is the first 3-wave move is already in this then being a 3-wave structure, another corrective 3-wave structure, and then eventually another 3-wave structure to the upside, or this is only the beginning, a 3 waves here, then we get a correction, and then eventually another move to the upside. The targets are a little bit different between what is common and what is rare. So the most common target area for a wave C is the fibs, the white box basically over here with the two 1.618, which also includes the daily naked point of control, which for me is a very important target actually in this range. We hit the daily naked point of control at the lows for support, and we can then hit the daily naked point of control at the highs for resistance. However, if we look at the most common target areas for a wave Y, and we take this as the W high to then the X low over here, you can see these are the fibs, the most common target area for wave Y. These are significantly below the daily naked point of control, and therefore this target area currently is an alternative. Not to forget that the rare target for a wave Y, if I actually put it on, is the 1.618 in orange that you have over here. So still a rare target, which is a target nonetheless for a wave Y, is still up here for the daily naked point of control. So therefore this is very, very interesting. And in my morning video I explained, when price was ranging around here, that if we get another move to the downside, we could potentially see some bullish divergences between the low that we have over here and the low that we are going to make for then a potential setup, right? So if we go to the 15 minute over here, which is the CVD chart that you're looking at the moment, we can see the low that we made and price making a higher low. But if we then look at the yellow line, you can see that price, or the CVD line here, the yellow line, is making a lower low. So we have price over here making this low in yellow, and then a higher low in price, but as you can see, lower lows over here on the CVD, which is a bullish divergence, which then can trigger a potential trading setup where upside is expected. Of course, price could still go to the downside once more. We have a little bit of other confluences in this area as well, for then basically a bounce a little bit lower, for then the move to the upside in this more bullish scenario, of course, where then the target is still, I think my interesting target is just the daily naked point of control at 28.1k. I think that would be very nice. So then the potential target is over here, and if this is then part of a WXY or an ABC structure, then the potential short setup over here is entering the potential shorts over here around the daily naked point of control, stop loss somewhere safely above, for then a continuation to the downside in the bigger trend that we have. So this would then also be the end of a wave 4 on the low time frame, for then eventually a continuation to the downside in a wave 5. So this is currently what I am looking for the more bullish scenario. And if we then look at my alternative scenario on the micro, it is the more bearish scenario. And the reason I do like to show you this in this video is actually because of this structure over here. So if this is a 3-wave structure in then the bullish scenario, so if I flip that one on really quick, you can see over here we then have a WX and then this in a Y, which then makes wave B, right? So we have 3 waves in this wave B. But if this is a 3-wave structure in a wave Y, it has to be some sort of a zigzag, because this is a 5-wave move followed then by a 3, and then you want to see another 5-wave move, right? Okay, this could be a 5-wave move, absolutely. This is a 5-wave move. But then if we put on the targets for a zigzag, and let me show you then also what I mean. The target for, or the most common target for a zigzag, not that one, this one over here, has not been hit. So the most common target area for a zigzag is actually down here between the 1 and the 1.236. Now a more rare target for a zigzag is hit. So of course, you know, everything in between the 1 and the 0.618 could be a potential target for a zigzag, but most commonly the zigzag is hitting the 1 to the 1.236, which it didn't do. Of course, we did have strong support with the daily naked point of control, so that might be a reason that in this particular scenario, if this is a zigzag for the bullish scenario, we did not reach the most common target area, and we're going to find our way to the upside, which of course is still my preferred scenario. But therefore, we do have to take into account the bearish scenario, where this is then potentially a wave 1, a 3 waves in 2, and then this is another wave 1, 2, for then eventually a bigger 3 to the downside. Now, considering the bullish divergences, of course, this scenario at the moment is not really supported. Preferably, you want to see bearish divergences between this high and this high, or the high that we have here and the highs we're going to make, bearish divergences on the CVD to then push price to the downside. But we don't have those. So as it stands now, the upside is preferred. And again, the daily naked point of control at about 28.1K is very, very interesting. If we very quickly, and this is very rare that I do this, go to the 1 minute and we look at this structure up over here. It is more looking like a 3-wave type of move. Doesn't mean that price can't go to the upside and continue, but the fact that this might, looks a little bit like a 3-wave structure, right? Move up, bit of a range, and then another move up, might mean that this is still a corrective structure where we have a little bit of downside expected to go to the lower end of this blue target box for then another move potentially to the upside. Because of course, all the trading scenarios, everything I'm showing is educational, based on Elliott Waves and the other technical analysis stuff that I am using to hopefully teach you some of the things that I look at and when things could be potential something like a potential trade or not, based on all the information that I share. So of course it is purely educational, but going from the lower daily naked point of control with some bullish divergences to then the higher daily naked point of control would be an ideal scenario. But of course we have to wait and see what price does. I hope this video was helpful or valuable to you. Please check out the macro and the high time frame video if you're interested. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.